Welcome back. This is Mary Rafa, and we will discuss about the sale of personal residence calculation. So, this chapter is similar to the chapter we discussed earlier about how to calculate the adjusted basis of your capital asset. But now we are focused on personal residence. So, what is the formula here for personal residence? So, when we see gain realized, it means this is the amount realized less adjusted basis of the old residence. So if there is a gain, this means that you sold the property and the amount you receive for that property is the amount realized. And to calculate the gain, you have to deduct the cost of the property, and it was defined as adjusted basis of the old residence. So how much is the amount realized, or how much is the property sold to you, or how much is the property that you had to note as the sales price or the amount realized? So there's a formula. It's not just the sales price. You actually deduct the selling expenses. So the sales price less selling expenses is the amount realized. So if you have a property and you're trying to sell it, and let's say you sell your real estate property, your personal residence, for $600,000, and you spent marketing expenses, you have to deduct that to that $600,000. So that will be your amount realized. And then to calculate the gain, you also need to calculate first the adjusted basis of that property. And we still follow the same formula, the capital asset formula of the adjusted basis, which is original basis plus capital major improvement. So, and then capital improvements or major improvements, these are the major expenditure for your permanent improvements. And on top of that, you can actually not top of that, what's included in or classified as capital improvements, these are the restoration of the property, amounts that results in the increase in the value of your property, that increases the useful life of the property, amounts that you have to spend to adapt the property to a new use, architect fees to create an addition to the building, cost of the addition to the building, and any other costs in adding more major improvements to your personal real estate property. So just a recap, the original basis of the property that you're selling, it's the cost amount paid in cash plus the loan and other property or services. And for property that you acquired through inheritance, you have to use the fair market value at the date of the death of the one who gave it to you. And if it is received as a gift, you have to get to the donor's basis or the cost, the adjusted basis of that property before they gave it to you. And then you include, and in that original basis that you can deduct from the sale, from the amount realized to determine your gain, you also need to add the following to calculate your cost for the original basis. And you include the sales tax, the freight, the installation, testing, excise taxes, revenue stamps, the real estate taxes that the seller agrees to pay. Even though the seller pays for it, you still get to deduct that and add that to your cost. The liability assumed for the seller, the charges for installing the utilities, legal fees, title research fees, preparation of sales contract and deed, recording fees, survey fees, transfer taxes, owner's title insurance, taxes that seller agrees to pay, interest that seller agrees to pay, recording fees, seller agrees to pay, mortgage fees that seller agrees to pay, charges for improvements that seller agrees to pay, charges for repairs that seller agrees to pay, and sales commissions that seller agrees to pay. So these are all the costs that you can add to this property, and that's also a good example if somebody donated the property to you, because you can actually go back and get that data. So hopefully you have that data when somebody donated a property to you. You have that data from them, because those are your costs, and that will help to reduce the gain when you sold your property. Okay, so I hope you understand this. This is basically just a cheat sheet for you to what's the formula to use. I'll see you in the last topic, which is the capital gain tax calculation.